Today is Tuesday, March the 23rd, and we are oversold. So the bears have really taken control. We've gone into an oversold position on the McClellan oscillator. Not unexpected. We were actually hoping to see this kind of repeat where we would go back up into the neutral area. But we said that if we repeated that, we were likely to go back into the oversold. Well, history didn't quite repeat itself. It just skipped a step and it's gone into the oversold. Now, it can stay here for a while, which is what happened just recently. And we had this dip right here in the market. Now, this video I referenced yesterday, and I hadn't listened to it, and I just listened to it. I think it's really good. I think you really should listen to what he has to say. He talks about liquidity, the amount of money that's in the market, and illiquidity, when there's not enough money in the market to boost stocks. So the stocks go around looking for opportunities. And that's why we've saw what we did yesterday, where the indexes were up, but the decliners led advancers. So you get this twist. And he refers to that as illiquidity. Now, what happened is that right at 2 o'clock, and that's right about when I think the Fed had a few words, the market just tanked. The Dow was sort of going neutral, staying where it closed yesterday, as did the NASDAQ, as did the SP 500. And then in the afternoon, it just tanked. And we didn't really have very many stocks that were in the green. Unfortunately, the financials were in the red and the healthcare were in the red. Consumer defensive stocks were pretty green. So again, we're seeing a mixed message here. Again, in the in this heat map, decliners led advancers by about 9-1. So that was a definite rout, although the numbers weren't all that big. S&P down 30. I mean, that's not a rout. 60, 70, 80 is a rout. Minus 30 is a pretty serious hit nonetheless. So now let's take a look at the charts and let's see if we see any reason for optimism. In the Dow Jones, really this doesn't tell us very much. The Dow Jones is just pretty high. What we could do is we could draw a Fibonacci, and let's just do that. Let's just do a Fibonacci from here down to here. And we'd be looking for a pullback maybe to 38% right down to here. Or if we did a bit bigger, if we did one here, because we did get support on the cloud, so that's a key point. If we do that, we see that the market did pull back to exactly, right here, 78.6%, and then had a run up. If you watch that video by McClellan, he's going to tell you that the end of March and the beginning of the first quarter is typically down 3 times out of 4. So historically, we shouldn't expect a good time for the next week, the rest of this week and next week. But he said that after that, he sees the market taking off like a scalded dog. So he really sees it turning around and going much higher. Then later on, when he talks about liquidity, illiquidity, he sees liquidity coming back to the market big time, shortly into April. So expect a bit of a pullback. Let's look for other signs. In the NASDAQ, we did see support right here on the 50. So if we take our green line and put it at the low of today, we saw the Chiku span get support at the 50. The last time we saw that happen with the S&P, we had a bounce. Now, where did the S&P finish? The S&P finished, when I talk about the Chiku span giving a bounce, it was right back here off the candles, and we had that bounce. Now the Chiku span is actually right here. It finished right at the bottom of this candle. So it didn't finish below the candle, and I think that that's significant. That's where it finished. Its low point of the day was, in fact, below the candle, but it did finish right on the candle. Again, that's another positive step. It doesn't mean we're going to see a big bounce. It just means that there's chop ahead. My little Alex stock reversed a lot of its gains right there. Apple down slightly. Do we see any signs here? We actually don't. We see the Chiku span getting rejected by the cloud. That's certainly not something that we like to see. Builder, we're just going to give up on. It's lost its 50 now. The candles are below, the Chiku span's below the candles. I'm not going to talk about that stock anymore. I'm going to remove that ticker. Home Depot was up and pulled back, but nonetheless up. Good sign. Banks, not so much. Neo, look at where it stopped. Look at that. That's the second time now that the Chiku span has hit the bottom of the cloud. That calls for Neo possibly to look for a little technical bounce tomorrow. Square, love Square. Where did it get support? Look at that, right on the top of the cloud. So Chiku span everywhere that is significant, getting support. Look for a bit of a bounce, but look for the S&P to continue to do the pullback. And where's the Fibonacci's that we drew? Those are the big Fibonacci's. We drew some on the Dow, didn't we? We did on the Dow. Let's draw some. This is the last thing I'm going to say. So if you want to cut out here, that's fine with me. Let's just bring this in. And we saw this support on the 50. With the Dow, we took support as a bounce off of the cloud. So we're going to draw our Fibonacci's from the 50 and see this was back to 78.6 right here. We actually almost had a full pullback to this point. You can see that these two wicks came right back down to here. So this is a valid Fibonacci. And now we're down at 27.2. You know, we could easily go back down to the 50 again, which is right at the 50% Fibonacci. So that's where I'm calling the bounce to be. So I've put on short calls on all of my stocks, and I'm just going to gather some premium on those, but I'm not getting out of anything. But I'm not ready to add any money into buying the dip right now.